Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Tuesday evening, the 6th of September, 2022, just around 5:37 a.m. Central Time. So as we take a look at the markets, traders are coming back in a large way to the markets now. So you got to start paying attention to volume increases, what's going on in the marketplace, the battlegrounds that are going to form. The energy war is monstrous in Europe. Russia keeps shutting down the amount of energy they get in the hope that they can get them to the point where they break the will of the people by creating energy prices that start shutting down bakeries in the Netherlands. That's something I've been reading about. Aluminum production is starting to shut down in France. So you keep seeing more and more things going on because of the cost of energy. Will that wear on the people and say, hey, they're going to give in on this Ukrainian deal, they can't keep fighting this battle? Or is the resolve such that they just band together like they did in World War II and they fight it through? Regardless, there will be hate to the Russians by those in the European Union for decades to come. They won't forget this. If you're a Russian and you think you're going to parts of Europe for a good time, I think you're in for a rude awakening, just the way that you don't want to come to America. Let the Russians go to China. That's where they belong. So as you look at how this is all playing itself out, the markets are feeling the pressure of it. You've got the pressure of the last Jackson Hole meeting still, where the Fed says they're going to keep raising interest rates. You have an economy that is slowing down. And the big unknown, and we're going to find this out on the 13th of September, is how fast is inflation falling? It's a real unknown. I was looking today at Bill Ackman this morning of Pershing, and he was talking that he thinks a year from now, you'll have inflation at 3.5%, 4%. Well, if that's the case, the Fed most certainly will be done raising interest rates, and that's one of his arguments. I don't know. To me, there's going to be a number where it gets sticky. Sticky means you come down to a certain number and you don't keep falling from there. It could be because wages are higher, because rents are still staying relatively high, very high to be honest. There's just a host of factors. We don't know what food costs will be, things of that nature. So I understand that we all think that inflation is behind us to a big degree, the spike in America. That's not the case in Europe, but we're talking what we think in America. In Europe, energy prices are soaring, labor costs are soaring. Imagine being poor Miss Truss that took over today the United Kingdom as the prime minister. I can't imagine the nightmare that she's having. Reminds me of what Miss Thatcher had to go through. So it's going to be very, very serious, and we have to keep our eye on it. So when we come to the charts, you can see you're challenging these lows again in the gold market. I'm going to repeat. High interest rates, strong dollar. The Ukrainian war, how many are going to discount that situation? And inflation probably weakening in the United States to a degree. That is not the things that gold rallies off of. When we take a look at gold on the daily chart, you can see how the market's just sort of hanging in here right now. When I look at the D's gold, you can see that you've got this pattern of lower lows, lower highs. That's bearish. We're under the 18-day average of closes, so the bias is down. Let me define that. When you're under the 18-day average of close with price, that means your bias is down. So if the swing line is down, you're always looking to see, does the market stick with that in the sense of saying bias down, trend down? Instead of bias up, trend down, the two would fight each other. Everything is agreeing with each other here. The next phase that you look at, the Bollinger Band. Bollinger Bands are so darn important, I can't keep explaining to you. This is the season, learn how to work with them. When you hit a band, you normally get a bounce off of it. Not all the time. You can latch on and get trades that break out of narrowness. Example, when you get to narrow like you were here in the bands, it is common that when you get the breakout, if it's to the downside, you latch onto that Bollinger Band for a while. Learn how this works. Learn how you take positions off the first time you hit it, regardless if you have an embedded reading, which means momentum is locked in bearish. This is an embedded reading in gold. What does it mean? It means that rallies until the red line closes over 21 and the reading is 15 are likely to be sold, and the pros trying to drive prices ever so much to the downside until that red line closes back over 21. It's that simple. Can it stay there a long time? Well, you saw it do that, and look at the impact it had back here. You can also get bullish ones, and you can see how they'll work on the market coming up at the same time. So learn how to work with that. You have that embedded reading. That means to me the pros are aggressive sellers in this market. The gold-silver ratio, not giving up anything. Why? As we slow down, you just heard what I told you about aluminum in Europe. Well, in the United States, we have our own problems. You know, the cost of energy is pretty high here, too. We don't have Europe's problems. Let's not even pretend we do in natural gas prices. But you have an economy that is not, demand is slowing down, but we have a strong economy. It's a real strange situation. I'll repeat, you can't get a real bad economy out of when you have a strong labor market. People have money, they can buy. You can slow things down because the cost of things, intentionally driven by the Fed via interest rates, becomes prohibitive. You do different things. But as for our weakness versus Europe's weakness, don't even put the two together. They're not there. So when you look at what we have in the way of metals, well, this is an industrial metal. It's under pressure. The pattern, though, is not a trend. You have a higher high, lower low, but this is what's ruling the day. When you have an embedded reading, you don't care what the trend is. If it's bearish, you're looking to sell rallies. My course teaches you where, when, and how. There's 3 parts to it that teach you all that. It's very simple. It's 13 chapters. In copper, you began the breakout down here. Remember what I just said. You get to these parts in the marketplace. Let's see if I can bring this in. I'm not going to be able to, unfortunately. It's going to move there. Where the market hits the band out of narrowness, and then if it starts breaking out, it'll ride that band to the downside. This is called Gorilla Glue. I use that because you go to Home Depot, Menards, Lowe's, whatever your thing is. The strongest glue you can typically get is Gorilla Glue. There are commercial grades way stronger than that, but you and I aren't going to be able to get those. You have to have probably a commercial license, be a contractor, something. But when that happens, that's what it does. The difference here is you're not embedded. So while that's happening, no, I wouldn't be telling clients to sell the Bollinger Band. Broke out to the downside, I'll wait my turn. Markets give you turns. In the platinum, losing the embedded reading. Take a look at this. So you get a 24 reading. Okay, do I want to be short on that? Probably not. So a sign that, hey, you've had your break, market's losing that, time to walk away from the market. And in the palladium market, lower highs, lower lows, oversold, hit that band. I think the pros disappear like that in that market. Last in the dollar index, we have a pattern where the market is now approaching the 110.79 level with an embedded reading. Pros will take, in my opinion, some money off the table right up against that number now. Why not? So if they're in the market, if they bought into any of this, that's it. They'll come out of the market if the red line closes under 80. Haven't seen that. You're fully embedded, and as you can see, the market's getting bought on each of the breaks. That's how I view what these markets do. You keep hearing me talk about my Bollinger Bands. The reason is I think it's one of the most important things on a chart you could ever see. I was watching Charles Payne today on about 1:10 in the afternoon on Fox Business. I wish they'd invite me. I used to be on with Liz all the time. Wish they'd invite me to be on his charting show. I think I can show people nationally things they haven't seen if Charles would give me that opening. I do know the man. I'm Ira Epstein. You have a good day. You might want to take a look at this to learn a little bit about Bollinger Bands. See you later. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.